got Mia Kruger, Portfolio Manager at Kruger International, joining me at the desk. Thank you so much for joining me today, Mia. Let's start off with BHP Billiton. Down slightly on the day, 255 Rand. Pretty much coming in fact, better than expected. 34% drop there in full year profits. But I suppose it's really concerns around capex cuts, I suppose, short to medium term for this company. What are your thoughts on the numbers?
Well, short to medium term, like you said, it was better than the analysts actually expected. The numbers came in slightly above that, still down quite substantially for Billiton. We know that the commodity prices have been under pressure for the last 6 months. And that is actually what was the reason for this. They also had a couple of impairments. We know that they wrote down that the shale gas business in the US for 2.8 billion earlier in the year, and also a nickel project in Australia for around 400 million, which is two substantial amounts that also really impacted their bottom line for this year. Over the long term, though, they're still a company with great commodities, a great basket of diversified commodities, oil in there, which is also...
Oil a quarter now
yes.
of their profits, iron ore around 52% less than before, and base metals then a fraction, and then you've also got coal. So what do you think of that mix of assets?
That's right. They've got a very strong mix of assets. They particularly have a couple of assets which we don't see with Anglo, and that makes them also a company that you can hold in your portfolio together with Anglo. They have the copper and then the oil that Anglo don't have. And the same story as with the other diversified miners that we've seen in South Africa, sold down significantly with the commodity prices, but still they have those assets, and you're actually paying much less for them now that you've been paying for them over the last 10 years.
So buying BHP at these levels?
This is still a good price for Billiton, even though Billiton haven't shown as many opportunities on the buying side as Anglo have. Anglo have been beaten down even worse, but Billiton still offers value at this price. You're not paying as much, as I said, as you've paid over the last 10 years.
Let's just talk about the Lonmin and the platinum story right now, because we had commentary earlier in the week from the CEO of RB Plats, Royal Bafokeng Platinum, saying that they're not having issues at their mine. And before we chat about that, let's just take a look at a clip from that discussion that I had with Steve Perry, the CEO of RB Plats. When it comes to morale, just talk to us about where miners are right now, because we saw the devastating impact of the strike last week at Marikana. What is the morale on your mines right now? We've seen issues around productivity across the mining sector. Can you tell us, are you also having issues with union rivalry?
I have to say that surprisingly the morale is higher than I have expected. And I've got to congratulate and thank our trade union movements, the two of them, which is the big one, NAM as well as UASA. They've come to us to say we are aware of the macroeconomics in which we are operating. We are aware that we're lagging behind in production numbers for the year. What can we do in order to improve production and productivity? So together with them, we are working together. But with regard to what has been happening in the violent side of things in the industry, clearly there is more fear from the workers that there might be a spillover to us than the morale being down, and there's a concern. But again, the leadership is showing from the trade union side to say, we don't want what is happening out there to happen to us.
And that is exactly what has happened today. 500 miners striking at this point in time at RB Plats. And this, of course, a very negative signal as to what might happen for the rest of the platinum sector.
Well, we know that the sentiment around the platinum sector, especially after what happened at Lonmin, is particularly low at the moment. The investor sentiment coming from abroad is even worse than what we see here. Platinum is a very difficult sector. It's been a difficult sector for years. It's not an easy sector to get into. The problems in that sector is persistent. We know that they've had this trouble with the workers' unions and with the workforce for quite some time. The cost pressures in that industry is also significant. So whenever you see the platinum price turn around and it starts to improve, you'll still have the cost pressure, which will be a negative effect on those companies' bottom lines. And that is why, you know, there's so many different things that impact these companies' earnings, and that it's difficult to decide whether you want to take the chance to invest in them.
Bottom line, not even talking about investing, if you're holding the stocks, if you're holding Lonmin, would you sell Lonmin, would you sell Amplats, would you sell Implats tomorrow morning?
Well, it depends what the investor's decision was for getting into those stocks in the first place. We don't hold any platinum industry mines, so we don't have to sell any of them.
Okay, so let's move on. Grindrod came out with first half numbers today, 25% increase there. Overall, though, you know, it seems like they're doing well. They're starting to, the management systems and strategies are starting to pay dividends.
This has been a shipping company that we've all known, and the shipping is not the largest part of the business any longer. We've seen that the freight has improved very well, and it's a big driver there with the Maputo port and also with the coal terminal in Richards Bay. Even though there was a shortage on the coal supply side, they still managed to increase their exports from that terminal. And also in Maputo, they had a 30% increase there from that terminal. So that is a big driver, and going forward, I think that's probably going to be the strongest driver for
So they're well positioned for where growth is coming from already.
That's right, and we saw Remgro getting into Grindrod also for exactly that reason, for the benefit and the potential that the Maputo port actually holds for them into the future.
It's interesting that you mentioned ports, because talking to Imperial CEO today, they were saying that South Africa is not the hub that it used to be to getting into Africa. It's other ports, you know, West African ports, Southern African ports that are being used to, so they have to position themselves basically as a logistics company to take advantage of that, and they're not exactly there yet. But overall, did you like the numbers that came through from Imperial today?
Well, Imperial did really well. We saw their earnings was up quite a bit, but you saw the share price perform just as well during the year. The share price was up now over 50% for the year, substantially outperforming the market with a 10% increase there. So difficult to decide whether you still want to buy the company at this levels. It is a very good company. It has solid earnings. We know that we've seen increased sales in the car sector. The retail is still spending a lot. We saw that CPI coming in lower than we expected this morning. So all of those are drivers for a company like Imperial. But we have to look at the price, and you have to decide whether you're still willing to pay the price for.
It's not a demanding PE though.
It is not, but I must say, coming from where it came from earlier in the year, you have to consider it twice.
And of course, we can't let you go without talking about Massmart. Yes, earnings were disappointing, but if you strip out the cost, the $2.4 billion acquisition of, you know, from Walmart, or the conclusion of that, HEPS were actually up by 30% for the full year. I mean, if you're paying now for the future, surely it, you know, surely it justifies their slip back, basically.
That's right. So for Massmart, it would probably not have been such a disappointment, but you said again, you know, the earnings grew if you didn't consider the acquisition. The problem is that you have to consider it. You have to look at the bottom line if you're investing in it now. They substantially underperformed. If you look at the headline earnings, which we look at in South Africa, they substantially underperformed the other retailers in the market. But still, on the PE side, none of these retailers look like a buy at the moment. If you hold them, I wouldn't so quickly get out of them, because it's a very big story, like you mentioned, into Africa. If this is a long-term view for you, like it is for many abroad investors, then it might not be a story that will end so soon. But I wouldn't buy any company at a PE of 27.
Okay, so but just, you know, just looking at Massmart, if we're looking at their earnings and where they are generating earnings, do you like the distribution across? You know, they've got the building side, they've got, of course, Macro, they've got Dion Wired, and they've got Fruit Spot, they've got Massbuild. Do you like the type of companies and the positioning, the discount positioning?
Yes, they're definitely focusing on the right end of the market for Africa and for South Africa, and that is why they have performed very well over the last couple of years here.
But won't earnings catch up? I mean, PE of 27, yes, extremely expensive, but aren't earnings going to catch up with that?
Well, you have to actually consider the growth in earnings, and you'll have to see a substantial growth of over 30% a year, sustainable for the next couple of years, to actually justify a PE of 27, which is the chances of that being happening is smaller than the chances of it not happening, I should say. So it makes it a risky buy for you to buy at that PE.
What are you buying at the moment?
Well, the resource sector is beaten down. There is a lot of opportunity in there. For long-term investors, even as we spoke now about the retail sector, I wouldn't go there. But on the construction sector, on the commodity side.
You mentioned construction sector, but
that's another story. But so Anglo's, Billiton's offering good value. If you look at the numbers, any time when you got into Anglo's at PEs of 10 and lower, you were rewarded quite well afterward for holding the stock. It just depends on your time frame as an investor. We're long-term investors, so we're more than happy to buy those shares.
Mia, thank you so much for joining us today. Mia Kruger, Portfolio Manager at Kruger International.